What the flying fuck? What's up, millennials? If you have been following me for a while, you might know that TPGY is my largest position, and today we actually got slaughtered because we got some pretty bad news. We might not see a merger. Today we're going to talk about the issue, we're going to talk about the thoughts of a former hedge fund manager, and then what my plan is. So let's do it. So let's talk about the issue first, because according to this 8K filing which we got from the SEC, the TPGY SPAC no longer expects to be in a position to close the business combination by June 2021. And this has to do with, according to the 8K, the completion of the audited financial statements of EVbox Group, because this is going to take significantly longer than previously anticipated. Now, what they are going to have to do is to further review certain accounting matters, because they believe that according to the company Engie, because that is the mother company of EVbox, is currently necessary. Okay, so what might happen is the following. First of all, we might see this situation in which the business combination agreement may be terminated by either the company, which is in this case TPGY, or the Engie seller, which again is the mother company of EVbox. However, the company, so again TPGY, has the unilateral right, so only TPGY can do this, until May 28, 2021, so that's a very important date to take into account, to extend the outside date to September 6th, 2021, of course, from June 2021. They also state that they might actually renegotiate any economic or other terms which are part of the business combination agreement with Engie seller, again the mother company of EVbox. So all in all, the company TPGY has significant doubts regarding the likelihood that a business combination will be completed on the terms currently contemplated or at all. In summary, TPGY does not believe that they are going to be able to complete the merger by June 2021 because of these accounting issues that there are happening right now. We don't know for sure what kind of accounting issues these are exactly, but it just now, for now, looks like that the annual report, the 10K of EVbox, has not been completed just yet, and that is going to be taking longer than June to actually complete this annual report. It also looks like EVbox, or actually TPGY, might want to renegotiate the terms of the contract of the merger for whatever reason we don't really know. So it's going to be very interesting to see if we're going to have a revised merger deal going on in the next coming months. But it could, of course, also happen that we're not even going to see a merger with EVbox, because maybe TPGY is not going to be happy with the renegotiation, or maybe they just want to get a better deal, but EVbox says, no, we're not going to give you a better deal, and potentially that could lead to TPGY just closing off the merger with EVbox, and in that case, they're going to have to find a new target. Well, we're going to have time until 2022, somewhere I believe in October 2022. We're going to take a look at that in just a second, to find a new target. The problem is, or well, a potential problem, and I think the likelihood is very low here, but the potential problem is that if they're not going to be able to find a new target by October 2022, then we are going to get our money back from these shares. So basically, we are going to get approximately $10 per share back if we don't see a deal happening before October 2022 with any company at all. And that is going to be about $10, but probably a little bit less because of any fees that might be happening and that might be occurring during that time too. So I went to Twitter to find a little bit more information about this whole issue, and I came across this pretty good feed from this guy Anpanman, or SPAC Anpanman. I'm not entirely sure how that is pronounced, but this is a former hedge fund manager and also a merger and acquisition banker, which is now posting his tweets on Twitter, of course. So this is a very interesting tweet, and definitely go to his Twitter. I'm going to put the link in the description below. You definitely need to retweet this, share it, because I do think it deserves quite some love. Now, first of all, what he is talking about is the so-called deal risk, because a lot of institutions usually are waiting until the SPAC deal is actually effective, is actually completed. So that basically means that institutions are holding off on buying TPGY shares, for example, because there is still a risk that the deal is not going to go through in the end. Okay, so then he comes up with some more interesting things. For example, carve out transactions. Because the thing is, EVbox is a part of Engie. And it is, according to this guy, very difficult to separate the clean financial statements, so the clean 2021 or 2020, of course, annual results, from the parent company, which in this case is Engie. He also says that, well, on top of that, EVbox is also a European company. So that means that they now need to take all these financials from EVbox and basically translate them from European numbers, if you will, to American numbers, from IFRS numbers, which are international financial reporting standards, to GAAP numbers, which are generally accepted accounting principles. So that is definitely an interesting and very complex thing too. Apart from that, he also talks a little bit about the TPG concerns, because it looks like there might be something more material going on over here. If we go back to the 8K, we can see again that the company, that TPGY in this case, might want to renegotiate the economic or other terms of this business agreement. So that is something that might indicate to us that there might be something in those 2020 yearly results of EVbox that made TPGY say, well, wait a minute, something is going on here. We might want to renegotiate our deal because this is something we had not expected. Mr. Hedge Fund Manager also talks a little bit about abandoning the deal, which is probably pretty foolish for both companies involved, both parties involved, because Engie in this case would maybe be foolish because they would have to seek another sponsor and they would probably get a bad reputation because they cut off the deal with the previous sponsor. But TPGY probably would also be very foolish in walking away from this deal because so far investors like me and probably like you watching this video have been pretty happy with the deal that has been coming on the table right now. So both companies would probably be very foolish in abandoning this pretty good deal that they have carved out for themselves. Now we can also see that TPGY first of all has until the 9th of October 2022 to get a deal done, whether it's going to be with EVbox or with another company, but it is going to require a lot of money if the SPAC has to find another company to acquire instead of just going with EVbox. And then we can also see that we are right now going to have to wait until May 28th, because that is the date when the company, so in this case TPGY, is going to be able to extend the date to September 6th, which is a very important date. So yeah, they're going to have time to figure out the issue, to hopefully come up with a solution, and then actually let the merger go through in the end. So that would be pretty good, of course. Now we can also see that Mr. Hedge Fund Manager, as I'm just going to call him, is saying that if the stock is going to go to the mid-10s, and of course this is not financial advice, and the warrants to the mid-1s, then that might be a decent bet to take. Now I will add to this, I do think that if we go to the mid-10s, it might be an opportunity. Again, that's not financial advice. But with regards to the warrants, I'm not entirely sure what happens when we don't see any deal happening, because I believe that if we're not going to see any deal within 1.5 years, basically until we get to October 2022, then the warrants are going to be expiring worthless, and that might be a way higher risk compared to the common shares, which are just going to go, which we're going to be able to redeem for $10 per share. But if the warrants expire worthless for $0, you're not going to get any money back. And then the last point that this guy makes, and again, he was a former merger and acquisition banker, is that he says that most of the times these issues can be resolved by a price cut. So that it basically means that the valuation of EVbox is going to come down, which is actually going to benefit the shareholders. Now, I would be very surprised to see this happening, because I thought that the valuation was already quite attractive, especially if you compare it to ChargePoint and some other EV charging companies. But yeah, I would definitely welcome it, of course, if we get an even better deal on top of the deal we already have right now. And just a final note that I want to make apart from this Twitter feed is that a lot of people talking a little bit about the warrant issue with the SEC, because the SEC has said that a lot of SPAC companies need to restate their annual filing because the warrants need to be accounted for in a different way right now. So I don't think that is going to be the main issue here in this TPGY case. I think this TPGY issue is actually a deeper issue, a broader issue than just the SEC warrant issue. And apart from all of that, we did have an interview with the CEO of EVbox a little bit less than 1 week ago. I listened to the interview last weekend. I didn't really watch the interview, but someone in Discord told me today that he saw the CEO of EVbox here sitting with crossed arms, that he might be already very, very negative about the deal with the SPAC. But I don't really think that was the case, because he does talk in the interview about the merger going on and being effective later this year. That is what he says, later this year. And he also says that it is pretty good to have a North American shareholder if you want to build out your company in North America. So I don't really think that EVbox is the company that wants to renegotiate the terms, wants to not do a merger. But I think the issue lies more on the side of the SPAC, so TPGY in this case. Now, something I would like to do with you is to calculate the current expected value of TPGY. And that is something very important that you can do now and then to avoid some binary thinking. Because a lot of people think, well, this is going to zero, or this is going to $10 per share, you know? Or a lot of other people say, no, this is definitely going to go through. In 100% of the cases, this is going to go back to $25 per share, and we're all going to be very happy. But I think there's a lot of things in between there. I think that it's not going to be the case that we are either going to see $10 per share or we're going to see $25 per share, but it's going to be somewhere in between. So what I think is very interesting to do is to calculate the expected value, which you do by multiplying each of the possible outcomes, which we're going to do later on, by the likelihood each outcome will occur. And then we're going to sum up all of the values. So that is exactly what we're going to do with TPGY right now. And first of all, I'm going to give you my opinion. If you want to change these numbers, you can, simply create a similar spreadsheet and then put in your own numbers. Or you can actually hop into the Discord, because I did share this document with my Discord members. You can just go to nesami.com/Discord. Then you can leave your name, leave your email address, and then you can have access to this Excel sheet. And this is what we're going to use to calculate the expected value. It's basically a collection of all the possible outcomes which I believe can happen. And then I've I just gave it a certain probability that I believe is going to be more or less the case, and a certain price, a certain outcome that is going to happen. And then, we're going to calculate the expected valuation based on top of those numbers. So first of all, the first possible outcome is that we're not going to see an extension until September of this year, that we are going to see a merger happening, and that we, of course, don't need a new target. I think that the chance for that is very low. I think it's just like 5% or something like that. But if it happens, I do think it is going to be the most positive outcome, because I think that would be the most bullish sign for EVbox. So I do think that we could even go back to like $25 per share potentially. But I think, again, that the probability is very low. Second probability, or second outcome, is that we are not going to see an extension, that we're not going to see a merger with EVbox, that we are going to see a new target, and that the new target is actually good. I think the chance is like 5%. I think that the price that we could allocate to that situation is about $15. So then the expected value of that becomes just 75 cents. And then I've put all of the possible outcomes here. I'm not going to go through all of them, of course. But you can get an image basically of what I think is happening right now, what I think the possible outcomes are right now, and how high the probabilities are. So as you can see, this is the highest probability. I think that the most likely scenario is that we are going to see an extension, that we are also going to see the merger happening between like now and September 2021, and that we don't need an actual new target. I think that is the highest likelihood, and I think if that happens, we are likely going to just go back to like $20 per share. So I do think that is very likely to happen. The other scenario that also could be likely to happen in like maybe 20% of the cases is that we are going to see an extension to September, but they're not going to be able to work out the details of the merger, and then the merger is just going to be canceled basically. Then they will have to find a new target, but it's probably going to be a solid target in like 20% of the cases. And if that happens, we might see a price go to like $15 per share. So if we do that for all of these outcomes, if we calculate the chances for all of these outcomes, if we then allocate a price to that outcome, then we can calculate the expected value for each of these outcomes and the total expected value by summing up all of these individual expected values would be $17.47. Now, this is a very simplified way of doing things. Yeah, it's just my own opinion of doing things, my own opinion of the chances, the probabilities that these outcomes are going to occur, and of course also my opinion with regards to the prices, the price targets that would be allocated to these outcomes. Again, if you would like to change these numbers, please take your spreadsheet and change these numbers to come up with your own expected value. So yes, it is very annoying, of course, but I do think we're going to see that extension to September 2021. And if that is going to be the case, then it might actually take a few months before we are going to get this merger done. And again, that can take until September this year. Now, before you ask me in the comments whether you should buy or sell the stock right now, don't listen to me and don't listen to what I have to say, what my opinion is, but use the information in this video to make up your own decision. Ask yourself the questions, what is the chance that we do see a merger or that we do not see a merger? And what price targets would TPGY have in those scenarios? Now, before you leave, I'm very much looking forward to your comments about this situation as well. Do you think that TPGY is going to merge with EVbox after all or not? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye-bye!